Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
In today's video, we're going to talk about what you should do in a falling market. If you've been an investor in markets over the last few years, then one thing that you would have definitely experienced is how much of a roller coaster ride 2025 has been. We're only a couple of months in and already markets have seen volatility increase. You've also seen FIIs sell out. You're also having many raging debates about how you should invest in a year like 2025. At the same time, one thing that has become clear is that there is some level of slowing down on the growth front. This is clear from the RBI projections over the last couple of meetings. It's also clear in terms of commentary that's coming in from corporates as to how their earnings and profit growth has been over the last couple of quarters. So if we're taking all of this into consideration, one thing that we can understand is that the market is not as strong as it was in 2024. So given this new context for 2025, it's worth preparing ourselves for what's coming ahead. The first and the most important thing that an investor should do is to not panic. It's very clear that whenever we make emotional decisions about our finances, we're not always happy with the results. So an emotional reaction could be looking at a particular investment that's not performing too well and exiting it only to regret it a few years down the line. Alternatively, we might have this bias of holding on to losers and then being disappointed that they're not recovering at all in a particular market. So it's important to avoid our emotional biases that could sort of weigh on our decision making capacity, and we need to take a more balanced and cool approach. So instead of dealing with financial anxiety, we need to prepare for it. And this brings us to our second point, which is to pause and assess what we're doing. So any form of anxiety, whether it's in your life or with your finances, the best way to deal with it is to pause. Right? To not respond to the anxiety that we're confronted with at a particular point in time, but to take a step back and look at what's happening, assess the situation, review your options, and then take a decision. So we need to move out of this reactionary framework into a more reflective framework when it comes to our decision making. So what it means to assess the situation is to really look at your other options, to look at what your portfolio has done, where the risks are. This is a conversation that you can have with a professional or a mentor or whoever's helping you construct your portfolios. Which brings us to our third point, and this is about premortems. So premortem is an exercise that you conduct before something happens. So generally, if you're a person who's a little anxious or you're the kind of person who enjoys having well planned out investment strategies, then it's worth constructing a premortem. So the idea is that you start asking what if questions, meaning what if the market corrects 15%, how are you going to react to that? What if this particular theme or idea that you're holding on to does really well? Are you going to book profits from that? Or at what level of loss would you consider exiting? And what are your other options that you can do? So premortem essentially allows us to prepare for a wide variety of situations, not all of which are going to happen, but that mental preparation actually keeps us alert and helps us be disciplined when we're faced with a tougher situation. So doing a premortem can actually reduce your financial anxiety, can help you feel a lot more prepared when there's so much uncertainty in the market, and can actually help you realize much bigger goals by just anticipating actions that you need to take at the right time. And this brings us to our last point, which is look forward and not back. The basic idea here is that when we're looking at decisions that we've made, we might feel like we could have done a lot better, or that some investments have actually disappointed us. So when we're in that mind space, we might be a little bit more remorseful or have regret that we could have done certain things differently. The idea is that we can't change what's happened so far, but we can actually improve what's going to happen in the future. And any investor is going to go through their ups and downs, and no investment journey is complete without its own set of failures. So these are things that are part of our journey. They are lessons that we can learn, and there are ways to move forward from this in a very productive manner. So we hope you found this video helpful. If you have any ideas on what to do in a down market, share your thoughts in the comments below.